Hello, somebody. Signing in here is Sean Yubit. Signing in here is Sean Yubit. There are some of the things here I want to discuss with you. That is regarding the market in general, and also the structure as it is, so that maybe you can understand how you can able to find your entry points, as well as looking at the points of interest as well, and also to correct whatever concept that some of you've been using, or maybe understanding what I teach on YouTube that you don't clearly understand on the videos that I normally post on YouTube. All right. Today we're just going to have to look at the daily structure of our gold. I know most of people, they really want to understand how gold move, and looking at the daily structures and what we should expect, and what gold has been doing all this time, and what is it that we have to look at as well. All right. So with the gold, there are so many things that people fail to understand each time when the market creates a structure. All right. So there are so many structures which are created in many times when the market goes up and down, creating the higher highs, the higher lows, higher highs, higher lows. So you need to understand that each time when the market creates those types of structures, the market is definitely showing you the trend of which it's moving to. All right. So in most cases, when the market creates the higher highs, the higher lows, the market will be creating what we call a trend line liquidity on that kind of movement. So now let us look at the structure that I'm going to draw here, so that you may understand what I mean. Okay, so this is the structure that I'm going to draw here. This is the structure that I'm going to draw here. So many times when people see this kind of structures, they will say, okay, this structure is giving me an uptrend. But the question is, how do you know that the structure is giving you an uptrend? The structure is giving you an uptrend when each and every time the market keeps on breaking the highs and fails to break the lows. All right. When the market keeps on breaking the highs and fails to break the lows, we say the market is uptrend. That's one thing that you should understand. Each time when the market keeps on breaking the highs and fails to break the lows, we say the market is uptrend. So these are the lows that we are talking about here. This is our higher, this is our lower low. Okay. And then we have our lower high. And then we have our lower high. There is our lower high right there. And then we have another lower high here. And then we have another, no, we don't have a lower high. Then we have up here, we say we have a higher. This is our higher high. This is our higher low. We say that. And then we have our higher low as well here. And then we have another higher low. And then right there, we have our higher high. Okay. So each time when the market keeps on breaking the higher lows, we say the market is uptrend. When the market fails to break the lower highs, keeps on breaking the higher lows, we say the market is uptrend. All right. So now in a situation whereby the market breaks the lower low, we say the market is changing character. Okay, we say the market is the market is changing character. Okay, so if the market is changing character, what do we expect from that point of the point of a lower high? We expect the market now to retrace back, okay, retrace back from their point of interest on the higher high. The market sometimes might want to choose the breaker block, which is the way it was breaking the previous high. So we say this is our breaker block. Breaker block. Okay, so if the market breaks the breaker block, we want to see the market now retracing back to where it broke. That is that level, retrace back to that level, and then it shoots up, it shoots down, all right? So now this area is regarded as a breaker block, all right? On the breaker blocks, there are so many things that you might find. There are some liquidity voids, or there are some inefficiencies, or there are efficiencies on that level, all right? So break this structure, when the market breaks the previous low and goes back to the breaker block, we say the market now has changed the character. Now, where is your entry? Your entry is going to be on this level, all right, or this level. So the mistake that most of us wants to do is to find ourselves making mistakes of using this level right here as a point of sellers, this, or as a point of buyers here. We say the market now is going to buy from this level. This is the mistake that we find us as traders making, to say we are buying, I'm scalping from this level to that area, or I'm taking that high. You don't know that the market has already broken the previous low to go and retest on the breaker block to continue selling. All right. So there is no way how, when the market has changed the character, we'll continue buying. When the previous low is taken, it means that now the market is pushing down with a higher, or a strong order flow. All right. So now let us look at the structure. I know most of you guys, you will say, no, this structure shows me that the market is uptrend. So many times when people comes now with the trend line, they will draw the trend line below the lower lows right there and say, okay, now my trend line has been broken. No, I want the market to come and do what? I want the market to come and retest from this level, and then it will give you an entry. With the trend line, this is the area where you're going to enter. With the trend line, this is the area where you're going to enter. But with the structure, understanding the structure in a rightful manner, you'll understand why the trend line had to be broken inside so that the market can break outside again. All right. So they normally say that they want the trend line to be retested, but it's not always the case. The trend line has to be broken, and the market has to still push up to mitigate, or to tap on the breaker block. So this is the things that normally most of us are getting confused when we see them happening. Now, when the market has went down to break this previous low again. Now, the mistake of us doing as traders is to want to counter trade the price and say, no, since we have broken this low, it means that this price now is going to go up to this level here. It is still fine to think the way you are going to think and say the market has to go to this lower low that you see on this structure. It's so fine to say, okay, this market is going to push. If it is a daily structure, the market is going to push to that structure. It is still fine to think like that. But there is something that has to be at the back of your mind, that each time when the market takes out the sell side liquidity, which is this low here, okay, this low here, the market will always want to retrace back. Okay, the market will want to retrace back. It depends on how it retraces back. It may use any structure. It can use any order block to retrace back to where it's coming from. Now, let us look at the structure and you can tell what you see. Now, on the structure, you see there, we have a high that has been created there. All right, we have a high that has been created, and we have this breaker that has been created right here. Okay, it is clear that in most cases, the market always looks at the points of interest. The market always looks at the points of interest. Now, when we use the PD array for ICT, we say, now we are going to look at the previous high, which is this high. Okay, we're going to look at the high that has been created by the market on the current market, okay, and this low, and say, okay, we want our entry. In most cases, a lot of people wants to analyze this high and that low there with the Fibonacci retracement, and they look at the 50%, which is this level. All right, they are interested on the 50%, which is that level. Now, when you look at the 50% of that level, that is where you are going to find that in most cases, the price does not sell or buy in most cases on the 50%, but it will always want to look at the premium zone. Remember, the high and the low represent the discount and the premium. So there is no way how the market can always buy from the 50%. It has to settle its value at the premium level. Now, for the market to that's the sell, right? Sorry. For the market to sell, it has to settle its premium level for it to give us a very nice sell. Now, for it to buy, it has to give us a very nice discount, which is to sell. It is to sell below the 50% so that it can give us a nice buy. For it to sell, it has to be above the 50%, which is on that high, to go to the discount so that we can have a nice sell. That is what you have to understand. So now, the discount is always measured. The premium is always measured. Is always measured at the 38% of the Fibonacci retracement, which is this level. All right. So this level here, that is where you're going to find lot of things there that is going to be able to take this market down, right? So you can find the inefficiency, which is the fair value gap. You can find the liquidity void. You can find the order blocks. You can find a lot of things on that level there that can take this market down. Now, this is where, if this market has already sold to that level, that is where you are going to look for your re-entry to find your entry on that level. All right. So this is what I have to teach you regarding the structure. Now, let us look at what we have on gold. Let us look at what we have on gold. Now, gold has been giving us a little bit of bias that we have seen on the daily structure so far. So we want to discuss gold and see what we should expect on gold so far. So now let us look at this break of structure. We see the market has broken the structure on this level. So in most cases, a lot of people, when they see the market doing like this, they say the market is uptrend, which is still fine. Somebody can say the market is uptrend, is okay. Okay. So now we want to see this market now creating a certain structure on the small time frame. Okay, so that it can able to do what? It can able to sell. Now, if we are going to be selling, where are we going to be selling to? Now, when you look at this liquidity void from this level to this level here, you will see that the market has already reached to this liquidity void to try to mitigate it. But it wasn't enough, because we want this efficiency to be taken out. All right. We want to see this efficiency to be taken out. So now this efficiency is a liquidity void. This is a space which attracts the market each and every time when the market wants to when the market wants to pull back or the market wants to buy. We always look at the space that will always attracts the market. All right. So in most cases, when the gold has done like that, it always leaves some of the liquidity areas as well, so that you may say, no, this is where the market is going to retrace back. This is where the market is going to give us this and give us that. I know most of the people who are trading gold in this scenario, they are looking for gold to come and fill this gap here around 2673. We should still find as well that we are going just to expect a pullback on that level, but the main structure that we want to see gold taking out, it is this area here on the daily time frame. So now, since it's a high time frame, we have to look at the small time frame and see what we have there that is a confirmation to be selling to this zone here and this zone here as well. So we want to see and find a confirmation on the daily candle that will able to pull this market from this level to this zone here and that zone there. All right. So now let us quickly go to the daily time frame or the daily candle so that we look at what we have. All right. Let me just try to zoom in. Let me try to zoom in. Let me try to zoom in. Now we are looking at the daily candle. This is our daily candle. Remember, the previous candle, that is the candle for the 18th of October 2024, the market closed above the previous candle, which is it closed above the premium. So now we've seen this candle here, it closed above there, and this one, it opened below the closing of this candle. Now, what do I mean? Let's look at these candles here. You can see that this candle, it opened below the opening of this candle, which means that there was a break of structure here. There was a break of structure here. This was a liquidity sweep from this level. This was a liquidity sweep from this level. Okay, I'm just going to mark it with the trend line so that it can be very nice. This is our liquidity sweep from this level. Now, since it's a liquidity sweep from this level, some of you are expecting gold to buy from this level. Some of you are expecting gold to buy from that level. Let me just change the color. You are expecting gold to buy from that level. Let me just make it blue. Okay. You're expecting gold to buy from that level. So we want to look at the possibilities if it's going to be a clear buy or is going to be a retracement or is going to be a pullback. And we will see as well that area, what it represents on the small time frame. Now, we are interested on the confirmations of sellers above there. All right. Now, we are going to look at this low, okay, of the current candle and this high of the current candle. All right. So this space here that you see above here, it shows you that sellers have been pushing the market down. It shows you that sellers have been pushing the market down. Now we want to see how the sellers were pushing the market down. Did we change the character to give us a confirmation of sellers from there? So what do we do? Now, what we are going to do is we are going to analyze that box that I've marked. Okay, we are analyzing this area that I've marked here. Forget about the movement of the price. You can't stop the market from moving, isn't it? We get the box where I've marked. You take the Fibo, you plug it from that level to this area, and then you try to zoom it a little bit. You come up with a 50% of that week, this is the 50%. Now, we want to anticipate that on the 50%, there is an unmitigated level from there that has to be mitigated so that gold can able to sell. Now, let's go to 1 hour time frame. The 1 hour time frame. We want to look at the 1 hour time frame and see what it has. So on the 1 hour time frame, we have a week as well. So, but we want to see this market coming to this week. Let's go to the 30 minutes time frame. We want to see this market coming to this week. Now, when you look at this level, we see that this market has left a little bit of a gap from this level, which was not mitigated. This one. Okay, this is a gap that was not mitigated. I know some of you who are dealing with the structure, you might find it a little bit hard to understand, but I will keep on being patient with you so that you can understand. This gap here has to be mitigated because there was a little bit of a void that happened from that level. So we have a little bit of buyers that are going to push from this level, and then the market will continue selling. All right. When you go to 15 minutes time frame, as low as you go, you see that this market, it broke from this level. It broke from this level, okay? That's the confirmation that this market is going to sell from where I've marked. It broke from this level, okay? Which means there was a change of character from that level, and there was a break of structure here, okay? So since this market broke from there, the market now shows us that it changed the character. It changed the character from there. You see, when you are looking at this on the daily time frame, you cannot see such structure. But the lower you go, is in like the 15 minutes, you realize that the 15 minutes explains everything that I'm saying here in a nice way. So you can see that on the 15 minutes, we have a supply zone there, and there's a void here, or there's a gap here that the market has left on this candle before it closed, because the previous candles, these two candles here, which are bullish, they closed above there, and there was a gap which was left. You see, this candle failed to close that gap, which means we need to close that gap. When you go to the 5 minutes, when you go to the 5 minutes, you'll find that the gap that I'm talking about on the 5 minutes, the gap that I'm talking about in the 5 minutes, it is this candle here that represents a consolidation on a very small time frame. You see, this candle, I will just try to reduce the color so that maybe you can see it clearly. This bullish candle that you see here, this bullish candle that you see here is an order block of sellers. You understand? So this order block of sellers, when you go to 1 minute, when you go to 1 minute, 1 minute, there's something that you are going to see there. On 1 minute, we see, on 1 minute, we see a liquidity void or some kind of a fair value gap on that level that has to be mitigated. So you can see that that liquidity void, it has to be taken out on the 1 minute so that the market can start what? Start selling. From me, Sean, until we meet again with another video. Thank you.